Okay, for this video I wanted to talk about the Child and Dependent Care tax credit available for 2021. So the credit is computed and reported on Form 2441. It goes along with your Form 1040. It's actually relatively simple to figure out and complete. It's just a matter of remembering that this is eligible for you. Right, so if you're a parent, so a single parent, or if you're a married couple and you pay for child care expenses for your dependent, you might be eligible for a tax credit for a portion of the amounts paid during the year. So who's eligible for this? Well, the first item is obviously you have to be a U.S. taxpayer and you need a dependent, right? So you need a qualifying person that's a child. The child has to be under the age of 13, right? So you can't deduct or take a credit for child care paid on one of your kids who's over that age. But if you have a newborn child or a younger child and you pay for the dependent care, you can get a tax credit up to $4,000 for one qualifying person, so that's one child, or you can get $8,000 if you have two or more children in child care. So it's not $4,000 per kid up to 5 kids. It's $4,000, or you get $8,000 for 2 children or more. So in this example, what we have here is we have John. He's a single parent, and so he pays for child care for his one son. And so in order to complete the credit computation, he needs to complete 2441. So he fills out part 1, information on the child care provider. So he uses this daycare company in Florida. You need the address, you need the EIN for the company. If it's an individual that's providing the child care, you would need their social security number. Right, and so individuals and companies in this space know that you're going to be asking for this information to take the credits, so they shouldn't have a problem providing it to you. Item E, obviously you put the amount paid for the child care provider. If you had some of the costs covered by your employer, then you should reduce it by that amount, right? You can't kind of double dip here, so you've got to only report the amount that you actually paid to the child care provider that came out of your pocket. In section 2 here, we have the information on the child itself. So John Child is the one qualifying person, social security number for the kid, and then again, the amount of expenses that are attributed to this child. So if you had multiple kids, you would list all the kids here, and then the total paid to the care provider would be broken out across all 3 children or all 2 children. In this example, we've just got 1. So in line 3 and down, we just complete as the form asks us to. So we've got 1 qualifying child, so we enter 8,000 there. If you had 2 or more, put down 16,000. In our case, we've got just 1. Enter your earned income on line 4. This is effectively your wages, right? So if we look at page 1 of the 1040 here, we can see John has income from wages, $35,000. He's got some taxable interest, dividends, some other capital gains here, and other income items, but his earned income is just his wages. So earned income is going to be your ordinary wages from your W-2, and it's also reduced if you have reduced or increased if you have Schedule C income too. So if you also run a side hustle and you have income from a Schedule C, whether it's a loss or a positive profits, those items are going to be combined with your wages. Line item 7 here is the adjusted gross income for the taxpayer. So 54,825. We can find that on page 1 here, line 11. Right, this is your AGI 54,825. So that's that amount there. And then moving on down the form, this is where you compute the amount of credit that you are eligible for. So in this case, John, his income is less than $125,000, so that's important. Remember, if your income is over $125,000 and between $438,000, you're still eligible for the credit, but there's a phase out. So you won't get the full $4,000. It'll start to be reduced as your income goes up. And then if you have earnings over $438,000, the credit is phased out completely. Unfortunately, you don't get any kind of dependent care credit. So you can just stop completing the form right there. But in this case, John, his income is below the thresholds. He does have a qualifying child. And so the amount of refundable credit to him is going to be $4,000. Okay, so where is that item reported? It's going to be reported on Schedule 3. So if we look at Schedule 3 here, additional credits and payments, you'll see that $4,000 reported down here in Part 2 under line 13G. We've got our credit for child and dependent care expenses, and it tells you there attached Form 2441. Then once that is completed, ultimately it's going to flow through up to your page 2 of the Form 1040, right? So we can see here we've got page 2, Form 1040, Schedule 3, line 15 item is reported there for $4,000. Now, one thing I want to highlight here is the refundable versus non-refundable piece. You'll note here on question B, it asks for 2021, your credit is refundable to you if your spouse or your spouse is married, filing jointly, had a principal place abode in the United States for more than half the year. So what they're saying there is, look, if you're a U.S. taxpayer, no matter whether you're living in the U.S. or abroad, you've always got to file tax returns to pay taxes. But if you live in the United States and you're raising this child there, you check box B and it means the credit is refundable to you. So down here, lines 10 and 11, it's asking, okay, so if you check box B above, this is going to be a refundable care credit to you. That's what applies here because John and his son live in the United States full time. But if you live abroad, so if you're a U.S. citizen and you're living abroad and you're paying for dependent care expenses, and you didn't check box B above, you would report the amount of the credit here on line 11. And as it says here, if you didn't check the box on line B, your credit is non-refundable and limited by the amount of tax. So what that means is you can still take the credit, but if the credit exceeds your tax liability, you're not going to get a check from the federal government, right, for the excess. It's going to be a wash and it's just going to phase out. Okay, so that covers it for dependent care credits. I hope that was helpful. If you have any questions, leave me a comment below, and I look forward to seeing you again on the next video. Thank you.